Rohr here with an early concise highlight on Wednesday, July 16th, 2014. It's currently 6:45 a.m. U.S. Central Time. So what does all that mean to the equities? Well, for right now, they're up. We're back up around the 1975 area in the U.S. S&P 500 future, so of course that's nicely up on the day right now. But as we noted yesterday, with the gap lower at the start of last week, when it was back below the topping line of the channel that was at 1975 coming in last week, you have a gap lower from 1977.60 to right around 75. It ate into it a bit yesterday on the initial friendly response to Janet Yellen's prepared comments, but during the Q&A, it managed to sag off quite substantially. So the question today again remains, was the anticipation on Monday, which saw this significant gap higher on not much news, the outlook for accommodative discussion from Janet Yellen, but as she got into the reason she has to remain accommodative, whereas even the good employment numbers are based on a shift that means much more part-time employment, etc., much more long-term unemployment. The market didn't like that. So we'll have to probably get through with her testimony today, and that will be the real test of what the equities are made of. So with that, we'd keep an eye again on 75 to 78 area, the old high, and know that even the topping line and oscillator that the market did not stay out above from 2 weeks ago when it sagged last week are as nearby as 1980 to 81, with the next resistance not until well up into the 1990s to 2000. So it's a very important decision, with lower support still resting back down at just where we suspected it might be, beginning around the up break from the end of last week, from Friday, at the 1960 area, which held and the market bounced back from it yesterday, but residual support into the mid to low 1950s, which the market only spiked below last Thursday before recovering. And therefore, it would have to be much below that to go back and test the still very important lower negated resistances down in the 1938 to 35 area. And that pretty much does it for the short-term view of the S&P 500.